You confuse yourself with a lot of videos with different strategies, and in reality, they're all the same based on three main concepts. In this video, I'll go over those three concepts and how you can make your trading plan that fits you based on those three main concepts. If anyone needs one-on-one mentorship, check out the description and let's get into it. The problem and the issue that you're having now is that you're moving from a strategy to another, thinking that, oh, this is better than the other, and this is a new one that I gotta back this. And you've been spending your time and wasting your time on something that is unnecessary and in something that it's not gonna really make you better. Why? Because all those setups and different strategies that you're seeing and people really uploading videos about them every day, they're really the same. All of those are almost the same, and they all rely on three main concepts. And what are those three concepts? And those are the ones that I really want you to understand. Those three main concepts. You're not going to be wasting your time after knowing those three concepts. And every video that you enter, you will know, oh, what is the main idea of this video? So, what are those three concepts? They are liquidity, market structure, and PD array. Those are the three main concepts in every setup that you see on YouTube. Now, let's take a look at this. If we pick any type of liquidity, and we know types of liquidity could be just normal highs and lows, or it could be sessions highs and lows, previous day high and low, etc. And market structure could be change of character, breakout structure, or it could be no market structure. We don't need to see any type of change of character or breakout structure. We just want to see price coming back into the range. All of those different types of market structure and PD arrays. And we should be familiar with the PD array metrics at this time. So it could be fair value gap, inverse fair value gap, it could be order block or breaker block, it could be a rejection block, and etc. etc. We have a lot of PD arrays. Now, using those three main concepts, and at this point, the real understanding of the market and all of the setups or the strategies that have been uploaded, now you'll understand all of those and what they rely on. Now, let's take a look at here. So let's say that a liquidity level would be looking for the Asian high and low. So this is my liquidity level. Market structure, I only want to see change of character, or it's optional, right? And the PD array, I would like to take, let's say, fair value gap. So Asian session high, change of character is optional, and a fair value gap here. That itself is a setup. That's a combination of the three. So you take one of this, one of this, one of this, and what is it equal to? A setup, a strategy. So Asian high in this case, taken, sweep, we have a fair value gap that I've entered from here. We go to this Asian session right here, Asian session taken, we have a fair value gap, right? And we have the optional change of character right here. Price went up, came lower to where? The fair value gap. So that's a setup. Now, if we go back here and we have another combination. So Asian session high and low, and market section, we need to see a change of character, and then what? PD array. I want to go with a breaker block in this case. The breaker block in this case, what do we have here? Sweep of the Asian high, price coming lower, price closing below this low. And what does that indicate? A market section shift as well as what? This was an order block, price sweep the high. So this is an order block. And when price closing below it, what is this now? A breaker block. So this is a breaker block entry, and we can see that it worked here. So what is the point of this? Why am I going over this? I'm telling you that it's not really a new strategy. It's not really the holy grail. It's just a combination of a liquidity, market structure, and PD array. Those are the three main concepts that if you blend together and you get a combination from the liquidity, the market structure, and the PD array, you get a setup. Today's video is sponsored by Hanko Trade, one of the best brokers in the business with spread as low as zero, low commission, and you can trade all markets, including Forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. Now, the same logic applied here. I have previous day low and previous day high. So this is my liquidity. And for the market structure, I don't want to see anything. I'll be using an inverse fair value gap. So this combination of a previous day high and low and an inverse fair value gap, entering from there, picking any reward to risk that fits me, people will think that, oh, this is a very new setup and this is the holy grail. But in reality, it's just a combination of this. So do not be confused and do not be overwhelmed and do not be moving from one setup to another just because, oh, it's a new one on YouTube or it's a new one on Twitter and you just saw it. It's just a combination of this at the end. So let's say, for example, on this case, price did take the previous day low, inverse fair value gap, there's nothing. And here we have an inverse fair value gap, a very small one. When did price close above it? So you see, so this is where the fair value gap was closed above by this candle, entering from here, stop loss below the last low, either this one or this one, and then targeting what? For example, 2 to 1. And price hit the take profit. So it's all about liquidity, market structure, and period array. Do not be confused. Do not be moving from one to another and then realizing, oh, this one worked, this one not. Some of them work, some of them not. It's your job to backtest every strategy and to find the winning formula. That's your job. And how do you find this? By, first of all, backtesting, having a lot of data based on this setup itself. And the most important part, all of this doesn't really work much if it's not combined and aligned with the higher time frame. That's the important part, and that's what not a lot of people would be telling you. I mean, this one worked, but if we go to the left and we see, for example, on the previous day or any day, for example, this one. So in here, price did not give me the inverse fair value gap entry, but if you go to the any of the previous days to the left, we can see that, oh, we had a inverse fair value gap here. Did not really give me a lot of profit. And a lot of time, it's not really going to work. Not a lot of time, but sometime it's not going to work. And why? Because it's not aligned with the higher time frame. When it work, know that it's aligned with the higher time frame, or its price going from premium to discount, or the opposite in the lower time frame. But you don't want to be getting lucky. You really want to be having the analysis on your side. So have the daily bias analysis, do some top-down analysis to ensure that, oh, the lower time frame entry is aligned with the medium time frame and the higher time frame. This way you would know that, oh, you're not just being lucky. It's your setup that is backed by the daily bias and the top-down analysis. In this example right here, what do we have? Why did this previous day low was respected? Because if we look at the higher time frame, the 1 hour in this example, we can see that the previous day low was this one. And what did it have below? A fair value gap. So this is a low in a fair value gap. That's one of the confluences. Another one is that the order flow was really going to the upside. So we can see creating short-term lows, taken here, going up, and price respecting fair value gaps, respecting bullish fair value gaps and disrespecting bearish fair value gaps. So that's why this one did work. So we need to know, and we need to be having the higher time frame aligning with the lower time frame, both at the same time. Otherwise, none of those setups are going to work. Now, as we said, liquidity, PD array, and market structure, those are the three things that you need to implement into your trading plan. So let's say that, we have the Asian high, previous day high and low, previous session high and low, and, previous week high and low, and all of the liquidity levels that you're aware of and you can use in a mechanical way, as well as the PD array. So the ones that I suggest using is order block, breaker block, fair value gap, and inverse fair value gap. Those are my main ones. And then market structure, you can wait for a market structure shift or no market structure shift or market structure shift and breaker structure. So let's say, so any of those trading plans, and I'll show you how you can create your trading plan. But any of those plans with the alignment of the higher time frame, that's all you need. So let's say that now I want to trade the Asian high and low, and that's on the lender kill zone. So with a breaker block, and I want to see a market shift, because breaker block is always aligned with, not always, but mostly with a market shift. So that's one of the plans. So, or I want to trade a previous session high and low with an inverse fair value gap, and I don't want a market shift. That's one of the plans. Now, if I put it in another color, I can do previous day high and previous day low with an inverse fair value gap, and then inverse fair value gap with no market shift. You see, we can create multiple combination in here, a lot of combination, and especially if we bring more PD arrays and more types of liquidity, there's going to be almost an infinite number of combination right here. But all of this should be combined with the higher time frame point of interest and the higher time frame bias. That's all for today's video. So hopefully you guys learned something new. You learned that all of those setups and strategies are just making you confused, and they're almost all the same. If you guys like this type of content, then make sure to hit the like button, subscribe, and leave me a comment with whatever you want next. This is Mulham, and I'll see you in the next video.